First thing I want to say before we get into this video, I am not a fortune teller, so I don't know what will happen with this upcoming week, and I am not a financial advisor, but what we are seeing on the option chain could foretell a quite aggressive move. Specifically, if we can get over $15 and $20 per share, the stock could go through a major gamma squeeze, and we got a lot to talk about in regards to that. Potentially some other things that could happen throughout this week that could help out AMC stock as well. So we have a lot to dive into in a very short amount of time. Hit that like button and subscribe to the channel because it is free 99. Thank you guys for doing that. Let's dive straight into this video. Also, if you guys want to come trade with me live in real time, link down below in the description. So first things first with AMC, before we dive into the actual option chain, I do want to take a look at the technicals and why I think this is kind of interesting, the way that we set ourselves up last week and how we're coming into this week, given the very large expiration, is because where we sit at, right? If you draw a straight up trend line from where we are currently at, you'll see we actually did close at the highest level we have closed at since about May 31st. So we're at a really good point and we had a really strong close. This is because Thursday AMC rallied 15.19% off of a tweet that Adam Aaron essentially said win pounce. And the last earnings call we got from AMC, Adam Aaron said basically we shouldn't interpret AMC's silence as inaction. Quote, "We are constantly exploring the smartest courses of action, and I promise you that we will pounce, but only when the timing is right." Talking about issuing a potential dividend, gift card, or NFT dividend to kind of expose the short sellers and to make them pay a little bit. And he tweeted that and put out that press release on Thursday for AMC earnings to be announced August 4th. And he says he keeps getting asked, win pounce, know this. 1, I always keep my word. 2, I've said publicly a pounce would not happen before second quarter 2022 earnings are announced. Press release issued today that Q2 earnings to be announced on Thursday, August 4th. Read between those lines. And what he had said up here was that they promise you that we will pounce, but only when the timing is right. So it's going back to the earnings call, and this is specifically what he wanted to highlight, and I think people are expecting quite a bit of good news to come out around earnings, and that probably sent some people into the stock. Probably, if I were to imagine, a lot of hedge funds, right? I don't think hedge funds were covering, but I do think some hedge funds wanted to take a long bet against the short sellers, because it's very simple to see right now hedge funds portfolios are not well equipped to deal with a short position starting to rally and go against you. You're just not in that place. When Tiger Global's down 50% in 2022, when other hedge funds are down even more than that, and by and large a lot of hedge funds are down 25-30% for 2022, you have a lot less capital to put up for a short position that starts to go against you. Those margin calls can come a lot sooner. So I do think there was some large money positioning on Thursday and Friday, and that set us up in a very good way on a technical basis. Ever since May 31st, we hit that high of $16.13 per share. Well, even if you take out this day, then we did close above any level we've seen since back here in early May, right? So we're at a good level in that regard. We broke out above the 50-day moving average, broke out above this descending level of resistance, and now we're kind of in between the resistance level at $15 per share. We went above $15 per share on Friday to about $15.30 per share. Did get rejected, closed under 15 at $14.66 per share. We did move up 8 cents here and after hours, about 0.5%, but we're still well off that 50-day moving average. So if we do come down for whatever reason, that's probably going to be support, but I do imagine that we flirt with $15 possibly for the next 1 or 2 days. It's even possible that coming on Monday we just gap out above that. If we can get above and close above the 100-day moving average at $15.76 per share, that's when I'm personally going to get more excited, because when that happened back here, I mean, you broke out above it and went much higher. I mean, the 100-day moving average was at $24.56 per share. We ended up going as high as almost $35 per share, specifically $34.33 per share in this rally back here in March. So if we break out above that 100-day moving average, you could see a pretty explosive move to the upside. But even think back to this almost 200% rally we seen in March, you did not have option activity in the same way then as we do now. So if you look at the options and you look at obviously this Friday, you have about 50,000 calls that are currently in the money. Cool. A lot of those are probably hedged for, right? And you do have 485,000 calls that are still out of the money, but you also have about 75,000 puts that are in the money. Now, a lot of people get this confused. When puts are in the money, market makers previously had to short stock to be able to take up the back end of those contracts, right? If you buy a $20 put, that means if the stock is now trading at wherever it's at, $14 right now, well, you can sell your stock for $20 per share, right? So how do the market makers make sure they don't lose money on that trade and they can actually make a small profit? Well, the market makers would have to go out and short stock at $20.20 per share, $20.10 per share, wherever your break even is, right? So all of these are pretty much already hedged for, aka short, have short positions out on the markets. The market makers do. And if those puts start to go out of the money, well, market makers have to go out and buy those shorted shares back again. So that's actually buying pressure if the price of AMC does go up. So keep that in mind. And you do have, like I said, almost 500,000 calls that are currently still out of the money. If we go ahead and take a look at the option chain, what actually helped by and large, I think over the last 2 trading days, helped AMC rally almost 20%. Was this $13 strike for July 15th. Last week's options as well, there was a lot around $13, $15, $14 per share as well on the option chain, but I think a lot of the actual bullishness came from the July 15th expiration. And you do have about 14,000 calls that are currently held in people's brokerage accounts for open interest at the $13 strike, about 5,000 at the $13.50, 18,000 at the $14 strike, and about 3,400 at the $14.50. Now it gets very interesting when you look out to the $15 strike as well as the $20 strike. So the $15 strike has about 23,585 options that are currently held in people's brokerage accounts with a break even of about $15.64 per share. That's where the market makers would really have to step in and start to buy a lot of stock. And then at the next expiration, $15.50, 3,000 for open interest, 8,300 at the 16, 3,500 at the 16.50, 6,800 at the 17, and then about 7,100 at the 18, about 4,000 at the 19. Then you get to the $20 strike where you have 46,712 call contracts that are currently held for open interest in people's brokerage accounts. Now, I just did the math, took the liberty to add up for all of the open interest from the $15 to the $20 strike, just $5, how many shares would have to be purchased by the market makers? And you're looking at about 10,300,000 shares that would have to be purchased. Now, if we look on the put side of this as well, you can add another million shares that would have to be bought at the $15 strike, add another 300,000 for the 16 and the 17 dollar strikes, and then for the $20 strike you can add another 3.1 million. So you're looking at roughly 14.5, 15 million shares that would have to be bought by the market makers if AMC stock could just make it to $20 per share. Now, people might say like $20 per share, that's crazy, that's not going to happen. That's only a 26% move from here. We rallied 15% on Thursday, so it's very possible that could even happen Monday or Tuesday. Like I said in the beginning of this video, I'm not a fortune teller here, but 15 million shares that would have to be purchased if AMC rallied $5, even if AMC went above 15, that's 2.35 million shares on the call side, and that is 1.3 million shares on the put side. So that's still almost 4 million shares just at the $15 strike, and that could help to catapult us up to around that $20 level. And that's essentially how a gamma squeeze works in a nutshell. And this week is very interesting because it could either be very bullish or very bearish. We have CPI that comes in Wednesday. If CPI goes down, obviously that's going to be a very bullish thing. The Fed won't have to raise rates as aggressively. If CPI comes in much higher than expected, we're expecting, believe it or not, a new high for year-over-year inflation. What happened last time that came out? Well, the stock market dropped on the S&P about 12-13%, right? Going from the 415 level all the way down to 362 in only a couple days time. So you're probably going to see a very bullish or very bearish reaction in the markets, and that is going to affect AMC to a certain extent. Now, I don't want you guys to forget the actual low of the year we hit on the S&P 500 was June 17th, right? You guys can see 360.217, June 17th. Well, AMC stock that exact same day actually went up 6.28%. So even though if the markets do come down, it doesn't necessarily mean that AMC has to play along. But the main thing that I want to see to help confirm a potential gamma squeeze, and where I would personally step in with a trade at this point, is if AMC can break out of the 100-day moving average, which is again at $15.76 per share. If we can, that's where I would initiate a trade, because then I think you get that move up from 15 close to about $20 per share. My price target in the last video was in between $17 and $18 per share. That's not considering if we go through a gamma squeeze. If we don't as much, if we just get a gamma kind of, call it a pop around, maybe the $15 price, maybe the $17 price, where you have a lot of open interest on the option chain, that could happen as well. But if you get into a full-on gamma squeeze and people are still excited about what Adam Aron said, that's going to be a very, very bullish thing. As we do know, people are still going to theaters, so the movie numbers might be good when they come out for this weekend, for Monday as well. That's also something that could play a role into if AMC does rally or not. But on top of that, the biggest thing you guys want to pay attention to is bond yields. If bond yields continue to go higher, which in theory they should, because the markets are starting to price in a 1% rate hike, well, that's something that could hurt AMC specifically. It could make some algorithmic trading programs, buy puts on the stock to bet against the stock. But what we're actually seeing right now as far as positioning for this Friday, 73% of the total option activity is calls, 27% of the total option activity is puts. If you even go out, to July 29th, pretty much the same thing. About 73% of the total option activity is calls, and only about, 25% or so of the put activity is puts for that expiration. Now, same thing, if you do go ahead and look at the S&P 500, you can see it's a total flip-flop. The actual option activity is very bearish for this upcoming week as well as over the next couple of weeks. So there's a big divergence between what market participants are expecting for something like the S&P 500 and what people are expecting for AMC stock. There is a really big disconnect as far as that is concerned, and Ortex might be down or something. It's just not letting me log in, but nonetheless, short interest around 17, almost 18%. That's the estimated number. And as we do know, there has been a lot of shares that have been getting returned, not necessarily shares that were actually covered, but some shares that were out on loan that are being returned. So that's why you're seeing the estimated short interest look like it is going down. You're also seeing the minimum cost to borrow rates going up to around 11%, and that is a very bullish thing, because you can get a wide divergence of what it is to lend out AMC stock, right? What the cost to borrow rate is. But when you see a minimum of 10%, well, it's usually around 15, 16, 17%. That's what the cost to borrow average is sitting around. So I do think it's very good. It looks very good in our favor this week for AMC. I don't think there's a huge reason why you should be short on AMC, just down to even the fundamentals and where people are spending money in the economy. Doesn't make a lot of sense to be short on AMC stock, and I think hedge funds might really start to feel the pressure if AMC does continue to rally, and specifically, like I said, break out of that 100-day moving average. The RSI is at 58.46, so not overbought, not oversold, not too bullish. You're pretty much at the same level you were at back here, and that was on June 27th, when AMC stock rallied about 13.31%. So if we continue to rally, RSI is going to move up. If it gets into oversold territory, well, that's usually when you tend to peak out. But we'll see if that happens. If that were to be the case, if the RSI went to oversold or overbought levels, then I mean the share price of AMC is going to be well over $20 per share. The MACD is very bullish. It is starting to show a little bit of a divergence here and getting a little bit more bullish. So I'm pretty excited about what I'm seeing, especially, I mean, over 10 million shares that would have to be purchased. 15 million if you include the puts as well, which I always do, because the puts, that's still buying pressure when those puts go out of the money after they were already in the money. Relative to the volume that we see on any normal day, in between 25 and 35 million shares that are trading hands. Even on Friday, only about 49 million shares trading hands. 15 million shares, that is a considerable amount, not even including some of the traders, some of the FOMO buyers that will likely head into the stock, even institutional investors that like to trade AMC, that like to trade momentum stocks. There is quite a lot of that still does happen. So that is pretty much going to be all for this video. I'm not going to throw around any price targets, but I do think if you can break 15, get that momentum, it could start a snowball effect that really could send AMC stock flying here. So that is my opinion. Those are my thoughts. Leave your thoughts down below in the comment section. Hit that like button and subscribe to the channel. Thank you guys for tuning in. You guys enjoy the rest of your day, and I will see you in the next one.